We're good to go.
Good evening and welcome to the Ad Hoc Committee, Audit Committee of the City of Norwalk. We will have a presentation this evening from our auditor. On the call this evening, the Ad Hoc Audit Committee representing the Board of Education is the Finance Committee Chairperson, Sherry McCurdy Pritchett. Also on the Ad Hoc Audit Committee is Nate Jordan. Myself, Greg Burnett, representing the Finance Committee. And we hopefully will be joined by the representative from the Board of Estimate Taxation, Troy Juliet. Henry, if you want, or Chitsime, if you want to introduce the audit team
Yes,
that will be
my
doing the
pleasure. Thank
presentation.
you.
Great.
Leslie Zoll is the partner in charge of our audit, and we've been working with her. I think it's been 3 years. It's time goes fast. And David Flint is another principal with our audit firm, CLA. So they led the audit and they will be presenting and then answering any questions the committee has. Thank you.
Good evening, everyone. If Dave could put up the slides for us.
Larry, can everyone share the screen? They need to share the screen. Oh, there you go. Great. Thank you.
Everybody see that okay?
Yes.
All right. Oh, it just,
It's not in slide mode, Dave.
Yeah, on the bottom right.
yeah, no, it just went to a different screen when I went to slide mode. Let me try, interesting.
David, I have the same issue with the dual screen. There's a
Yeah.
push top right, top left-hand corner. You could do mirror.
It
There's an
looks
option
like
to
it's
mirror.
working now.
Okay.
It's working now.
Okay.
So, good evening, everyone. Thanks for having us tonight. In terms of our agenda, if you can move the slide a little, Dave. I'm just going to go over what our responsibilities are as auditors. Then let you know what the audit results were, just high level. And then I'm going to give it to Dave to kind of give you some financial highlights on the financial statements, the federal and state single audit, as well as the management letter. And then I'll come back to just share with you some required communications and some of the upcoming GASBs. So in terms of our engagement, we express opinions on whether or not the financial statements are presented in accordance with GAAP. We also express an in relation to opinion on the state and federal single audit schedules, as well as on compliance related to major state and federal award programs that we test. We do not opine on internal control, but if there's any significant deficiencies or material weaknesses that we find during the course of our audit, we are required to communicate those to you. We report internal control findings over the financial statements as a whole, as well as compliance related controls to those major state and federal programs that we test. In terms of your audit results, the city did receive an unmodified opinion on the financial statements. That's a clean opinion, the opinion that you'd want to see each and every year. You did so again this year. You also received the certificate of excellence from the prior fiscal year on the 2021 financial statements. There is currently no findings to report to you in internal control over the financial statements as a whole. The results of the federal single audit, you did receive unmodified opinions on the federal programs, and there was one immaterial instance of non-compliance and significant deficiencies in internal control related to uniform guidance, and I won't I won't take Dave's thunder. He's going to talk about that more in depth later on in the presentation. And then on the state single audit, you also received an unmodified opinion, a clean opinion on the state programs we tested, and there was no internal control findings to report to you tonight.
Good evening, everyone. As Henry said, my name is David Flint from CLA, and I'm going to start tonight to go over some very high-level details from the 2022 financial statements. If you guys have any questions, feel free to ask. So we're going to start with the government-wide financial statements. These are performed on a full accrual basis of accounting, which means that it includes items such as capital assets and long-term debt. Now, this table you see here in front of you is from the MD&A, which is on page 21, but it is also like a summary of Exhibit 1, which is on page 29. You will see that the city had an increase in net position year over year of $46.8 million. You'll see that in the governmental activities line, total net position 2021 compared to 2022. That is primarily due to positive changes in the city's OPEB and pension deferred inflows and outflows compared to prior year. Capital expenditures that were capitalized and thus won't be depreciated until their useful lives come to term. And then the recognition of particular receivables from the Board of Ed Grants Fund that were recognized on the government-wide financial statements, but were not able to be recognized on the fund financial statements. If you look at the Exhibit 4 reconciliation, you guys will see all the items that led us to the change in net position, which are presented here in the government-wide financial statements as compared to the change in fund balance in the fund financial statements. So moving on, these are our fund financial statements, and this is Exhibit 4, which is page 33. This presents all the city's major funds, as well as the non-major funds, which is the aggregate remaining funds that are not considered to be major. You'll see that the general fund had a net change in fund balance for the year of $4.8 million, resulting in an ending fund balance of $83.5 million. The capital project fund had a small deficit, however, still has a strong fund balance at the end of the year of $32.7 million. The ARPA fund, which is obviously a new fund over the last couple of years with the influx of those funds, saw a deficit for the year of $572,000. But it's important to note here that that deficit is a result of unrealized losses of the investments that are held in this fund. Interest rates were obviously increasing dramatically over the period, causing these unrealized losses. And as those investments are held to maturity, these losses will be reversed.
Can I ask a quick question on that?
Sure.
Because isn't that sort of short-term funds? Like, are they short-term maturity or something? Because I see that throughout, and I know, some of the stuff's long-term, but it seems like those ARPA funds would be short-term.
So they're invested, Henry, correct me if I'm wrong, but it's like T-bills and stuff, right?
Yeah, we have the same restrictions on them as we have for all of our investments, Nate. We're not going out the yield curve, 5 or 10 years. They're relatively short term, but even with short-term investments, there was enough of a swing in interest rates such that we had these large unrealized losses, which normally we don't recognize, but it's lower of cost of market and it was material. But the reality is, our attitude is we are holding everything to maturity. So it's a temporary loss showing up in this year. And within 2 years, when everything matures, we will get those gains back.
Yeah, so basically, if you have a 6-month US Treasury bill with a 2% interest rate, interest rates all of a sudden increase to 4%. If you wanted to get out of that T-bill early, you would have to sell it at a loss, right? Because people could be getting 4%. So you're gonna have to sell it as a loss. So it's just a temporarily unrecognized loss that we're required to record. But again, once the city holds those Treasury bills to maturity, that loss will be eliminated. Does that make sense, Nate? Okay, so moving on to the Board of Ed grants fund. We showed a loss of $8 million for the year and an ending fund balance of 6.6 million. But that is primarily due to the nearly $9 million in grant receivables. So under the modified accrual basis of accounting, receivables have to be received within 60 days after year end to be recognized as revenue. The city had some receivables that were not received in the 60-day window, so we weren't able to recognize them as revenue in fiscal year 22. However, they will be recognized in fiscal year 23 once received, and thus eliminating this deficit that you see here. The last column is the non-major governmental funds, which is all the other funds that do not make it to the level of a major fund. And they saw a surplus of $6.4 million for the year, and ending fund balance of 32.9 million. If you want to see each of those individual non-major funds broken out, you can look at Exhibit B1 and B2 in your financial statements. So moving on to the proprietary funds, this is a snippet from Exhibit 6, which is page 36. And these funds include your water pollution control fund, your parking authority, and then your internal service fund, which is your insurance fund. All these funds saw great results for the year. The water pollution control had a $721,000 surplus and an ending net position of $112 million. Parking authority had a similar change in net position of 816,000, resulting in ending net position of 19.7 million. And then the insurance internal service fund had a change in net position of 1.8 million with ending net position of $9.4 million at the end of the fiscal year. Moving on, we have our pension and OPEB trust funds. This is Exhibit D2, which is on page 142 of your financial statement. And you'll see that the pension and OPEB trust funds, because they're heavily invested investments, they are trusts, saw a significant decrease in the value of those investments in fiscal year 22. As I'm sure you guys all witnessed on a personal level, investments did very poorly over the course of fiscal year 22. The pension trust funds saw a change in net position, a negative change in net position of $77.3 million. In the OPEB trust fund, nearly $20 million. Fiscal year 21, on the other hand of things, obviously was a great year. Fiscal year 22 kind of wiped all that out, unfortunately. So these next few slides are just kind of some financial highlights that I thought were important to go over with you guys. Honing in on the general fund balance, like I said, ending fund balance of $83.5 million, of which $38,000 was non-spendable. This related to prepaid expenditures. We have a committed portion of $438,000, which were education encumbrances from fiscal year 21. And then we have an assigned fund balance of $8.1 million. So $4.1 million of this was fiscal year 2022 encumbrances that were rolled into fiscal year 23. So they're still open. And also $4 million of fund balance, which was used to balance the 2023 budget. So after all that is considered in, we have an unassigned fund balance of $74.9 million, which is about 18.5% of the fiscal year 2022 budget. Some more financial highlights for you guys. Property tax collections were pretty consistent year over year, 97.4% in fiscal year 22 versus 97.8 in fiscal year 21.
I'm sorry to interrupt. Could we go back to that previous slide for a second?
Absolutely.
I just want to be clear that when we talk about the rainy day fund, we're talking about the unassigned fund balance, correct?
Correct.
I thought the 4 million to balance the budget came out of the unassigned fund balance. Henry, can you clarify that?
What do you mean by other side, Greg?
On the bottom of the slide, when we're talking, that is when it says unassigned fund balance, that's referring to the rainy day fund.
Right.
Yeah,
that's
correct.
83.5. If we deduct the 8 million, the 4.1 rolled over was people who had surpluses, but we designated them to be able to use that in the 23 calendar year, fiscal year. So the Board of Ed had 4.1 million, and we take it out of that surplus and we encumber it for them to use in fiscal 23. The 4 million was designated to offset taxes. If you take the 8 million away from the 83.5, you get 75.5. We ended up with 74.9 because of the other minor changes. So you're
Okay.
absolutely right, we deducted it.
But to your question, Greg, yes, if we did not designate that $4 million, the unassigned balance would be $4 million higher.
Okay, just wanted to clarify that once we took it out of the unassigned, it became assigned, and that's why we're
Correct.
showing it here. All right, thank you.
Where was I? Net pension liability. So this is RSI 3. Let's see, which is page 110 of your report. So the employees pension plan had a net pension liability of $70.4 million and is 74.5% funded. The fire plan, a liability of $35.7 million and is 76% funded. Police plan a liability of $51 million and is 72% funded. And the food service plan had a liability of $1.3 million and is 71.67% funded. All of your pension plans are funded in the 70% range, which in my opinion is pretty good considering the year the investments had in fiscal year 2022.
Just a question on that. How do the rising interest rates affect the pension funded liability? Because I know that sometimes you change the discount rate, and I think the discount rates, I guess, were fairly high to begin with, but would we be changing our discount rate and then somehow that would reduce or increase the funded percentage?
I'm sorry, excuse me, David. My understanding is with the pension plan, we had been using a discount rate over 7%. And as many other cities, we were reducing that by 1/8 of a point each year, the discount rate. So I believe we're now at 6.875 or 6.75. The thinking being the target is 6.5%. I believe for the OPEB plan, we're already at 6.5%. And the rating agencies know and understand we can't just jump down by 1 or 1.5% in 1 year. So they see that. And as David pointed out, in 21, we had a 25% return on our investments. And last year we had these negative returns, but we're pretty proud that the pensions on average are 75% funded. This is after those losses for the year. And the OPEB is about 95% funded. So we feel from the overall view, and they manage those assets for the long-term benefit to get 6.5% or higher. So we feel we're riding through a pretty volatile time, but we're pretty well funded. So that also reduces the amount we have to contribute to pensions and OPEB every year. If we had lower funded ratios, we would have to make more sizable investments every year. David, I'm sorry I cut you off.
No, that's fine. Yeah, Nate, to your question, the trend across the state of Connecticut has been decreasing these discount rates. And like Henry said, in small increments over a number of period of time to get to a rate in the 6.5% range, which the city of Norwalk is doing. But again, as Henry said, the city of Norwalk's plans are pretty well funded. So RSI 4, continuing with the theme of the pensions, RSI 4 is on page 114, and that shows that the city made 100% of the required contributions. So each year, your actuaries come up with an amount that you should contribute into the pension. The city is making 100% of this contribution. RSI 5, which is page 118, shows that the pension plans on average lost about 11.3%. That was your investment return compared to 27.25% in 2021. The OPEB plan, which is covered on RSI 7, which is page 120. The city's net OPEB liability is about $2.8 million, and that plan is 97.7% funded. So almost 100% funded for that plan, which is great. RSI 8 on page 121 shows that the city made a contribution that was $2.9 million in excess of that actuarially determined amount. So like I said, with pension, actuary tells you how much you have to put into the plan. The city actually put in an additional 2.9%, 2.9 million, which obviously helps us to get to that high funding percentage. And then finally, RSI 9, which is page 122. The OPEB plan had an investment loss of 13.9% compared to 29.9% gain in the prior year. Any questions on the financials while we're here before I cover the single audits? Okay, great. So I'm going to talk about the federal single audit right now. So the city expended a total of $46 million in federal funds in fiscal year 2022. The major programs that we audited were the American Rescue Plan Act, obviously more commonly referred to as ARPA, the Education Stabilization Fund, more commonly referred to as ESSER, Title I, Special Education Cluster or IDEA, and the Emergency Connectivity Fund. We had an unmodified opinion on major program compliance. As Leslie said, this is the best opinion that can be received. However, we did have one finding. It is a repeat finding from fiscal year 2021. And it is that the city's procurement policy is not in conformance with uniform guidance. So uniform guidance is basically the framework for grants management, and they have specific criteria that has to be in your procurement policies. The city has not yet updated their policy to include this activity.
I think it's important to note here that you did receive an unmodified opinion because there was no expenditures within your grants that reached the sealed bid thresholds. So there's no compliance issue necessarily, but there could have been had there been procurement activity within those grants.
Thank you for that clarification. Is there a specific time frame when we're expected to become compliant in this particular area?
In complete honesty, Greg, it was about 5 years ago.
Oh, okay.
That's a question for Henry on when they are going to update that uniform guidance, but it should have been in place a few years back.
Yes, our procurement director, Sharon Connors, is on the call, and she can address the issues. We recognize that we got this finding last year, and I know we've been making steady progress, so I'll let Sharon give us an explanation, even though her picture says Chitsime Land.
David, can I ask a quick question?
Sure.
So can you confirm, by looking at this, can you confirm that both the city and the Board of Ed use their federal grants as required?
The grants that we tested, correct.
Okay. Thank you.
We're not required, obviously, to test 100% of the grants. Grants that are considered to be major, which are over a certain dollar threshold, have to be tested once every 3 years. And those were the 5 that we tested this year.
Sharon?
Yep, not a problem. Good evening, everybody. So the good news is we actually hired a purchasing officer. They started in beginning of January. So we've done some cross training. So resulting from that has allowed my time to be freed up from doing the day-to-day, writing RFPs, making sure the selection process is compliant, and all the other great, wonderful stuff. So to start working on the refresh of the purchasing guidance. We're actually, we're going to be starting next week. We are meeting with our legal team, Taisha Toms, and she's going to be assisting our team on updating our purchasing guideline.
And
Any questions?
no, but if you ever want me to look on that, look at that throughout the course of the process, I'd be happy to do so.
Great, I appreciate it. Thank you.
Any other questions before I move on to the state single audit? So similar to the federal single audit, we also perform a single audit for the state grants. The city expended a total of $47.9 million in state grants in fiscal year 2022. The major programs that we audited this year were the Magnet School program, the pilot program, which is payment in lieu of taxes, the local capital improvement program, town aid road, and school readiness. We gave an unmodified opinion on major program compliance, and there were no compliance or internal control findings. So great news there. Okay, so we did have a management letter this year, just kind of our recommendations for improvement going forward. The first item in the letter was, of course, the uniform guidance procurement policy that I just spoke about. We would also like to see the city develop an accounting policies and procedures manual. Just kind of an in-depth guide of all the major financial policies and procedures that are in place in case you have turnover or someone has to have an extended leave. It would be a manual like this would make it a lot easier for someone to step into the position and fill the role seamlessly. 3 years ago, when we came in as your auditors, our IT team, we did what we call an IT assessment. So we kind of assess the internal controls, policies, and procedures surrounding the information technology environment. Some of those recommendations from that assessment are still outstanding as of today. So that was in the letter. We also recommend that the city perform a fraud risk assessment. So basically, we like to see city's management sit down with various department heads and just kind of a brainstorming session. How would somebody be able to steal from the city? How would somebody be able to commit fraud with the city? Think of these ideas, and then do we have the policies, procedures, and controls in place to prevent that from happening? If yes, great. If no, then we develop procedures to prevent it from happening. We kind of like to see this happen formally on a yearly basis. And then finally, we'd like to see the city implement a fraud tip line, a whistleblower hotline, whatever you want to call it. Just a method that's somebody can unanimously submit tips if they're aware of fraud or suspect fraud, whether it's via the website or a actual hotline to call. Both of those resources are available to use. It's just a recommendation that we made for the city.
Two questions there. Can you go
Sure.
back to that just for a second? So
Yep.
One on the accounting policies manual, is there no manual or do we have an outdated manual? And then third is, what's the plans to get one? If, are we going to do that? Which I think those are more Henry questions, but.
I would say that we have a listing of all of our accounting policies and we publish them regularly in the budget book and in the consolidated annual financial report. So it may not be bound into a beautiful document, but we have listings of all the accounting policies for all of the types of accounts that are out there. Okay. I think on the procedures, we've had vacancies and we've had some new people coming in, and we're also looking at our procedures to see if we can do things in a more efficient manner. So as we go through that and we put new procedures into place, it might make sense to compile all the existing accounting policies with the procedures, which is helpful for each department or area to just know how we do things and make sure they comply.
And then on the fraud risk assessment, is there a plan to do something like that or not?
I would say I am looking to retain forensic accountants to assist us in making an assessment. We've used them in the past on isolated issues when they've come to our attention. This is more of a generic overview And so I would look to work with forensic accounting specialists to get their ideas about assessment, recommendations for improvement, and then we can go from there.
Yeah, because I mean, I've seen that organizations do that, and it's a nice idea, but it also is involved and takes a lot of time to do what David's talking about, which is, sitting down and talking about all the ways people can steal from you, and it's good, but it also can be pretty involved. So I guess finding the right balance of how to do that, which maybe that's a good start with the forensic people.
Yeah, Nate, it's particularly involved in year one, the first year, obviously, when you're doing extensively, and then kind of after that, it's just kind of like an update, filling in any holes. But yeah, good point. Any other questions before I turn it over to Leslie?
Yes, as we look at these recommendations, is there, there's dollar amounts associated with each of these recommendations to implement them. Is there any priority in terms of, and specifically I'm talking about the IT recommendations, the risk assessment, and the fraud tip line? Is there any recommendation on which one we should work on first over the other?
So I'm just gonna recommend the fraud tip line is not that expensive, Greg. It can be easily implemented, so that's like an easy fix. Fraud risk assessment, you could go a number of different ways. You can just pick a risky department. You could pick all departments. So there's definitely a range there on what you can do. The IT recommendations are more critical in terms of risk, password changes, and that sort of thing. So that I would raise that a little bit higher, but hopefully that answers your question.
Yes, it does. Thank you.
Okay, moving along.
So each year, in accordance with our government auditing standards, we're required to share with the board a number of things within the financial statements. I do want to bring to your attention that this year we did implement a new government accounting standards board standard, GASB 87 on leases. It was a very robust standard this year. Although the financial statement disclosures are not that extensive, to get those numbers onto the balance sheet tends to be very time consuming. The city of Norwalk did hire CLA to help with that process. Lunda's team and Henry's team did extensive gathering of information for us to review in accordance with the GASB. We've then created the entries that needed to be recorded, which then they went back to review and approve. So I just want to very high level explain that what GASB 87 does to the financial statements. So this year in 6/30/22 on the leasee side, if the city of Norwalk entered into long-term leases for equipment or built, purchases of any kind, it's now recorded as a right of use asset and a related lease liability on your balance sheet, and that's on the government-wide financial statements, those full accrual statements that Dave talked about earlier. And then on the lessor side, if you're leasing out to other entities, we now are required to record that lease receivable and a present value over the course of the lease term, and then a related deferred inflow of resources. So the city of Norwalk did implement that standard, and you will see those add-ons within the financial statements this year. In terms of significant estimates on the ACFR, capital asset useful lives is one of those estimates. If you change the the lives of those assets, it changes to accumulated depreciation and depreciation expense, which then changes the value of those assets. The other few significant estimates are related to net pension liabilities and net OPEB liabilities. As we discussed earlier, those liabilities are based on actuarial assumptions. If those assumptions change, so does the values within the financial statements. Claims incurred but not reported. So that's an estimate of future claims that have not yet been paid. That estimate is based off of claim history with your insurance companies. And then that last one is related to GASB 87. GASB 87, in order to calculate the present value of those leases, we do use an incremental borrowing rate if there's no rate actually stated within the lease. And that's just based on historical borrowing rates in the area. So if that discount rate was, incremental borrowing rate was to change, so would those present value information on those leases. During the course of our audit, there was no disagreements with management. Norwalk's always very helpful in providing information for my staff. They did not consult with any other auditors during our audit period. There was no difficulties encountered during the audit. I do want to just make one mention that there was one correction that we made on the government-wide, I believe, financial statements, or possibly in the general fund, for revenue recognition on advances to taxing districts. There was a deferred revenue within the balance sheet that we felt should be recognized as revenue. So the actual uncorrected misstatement was just the difference in timing. We flowed it through the current fiscal year, and it should have been recorded in the prior fiscal year. There was no independence issues in regards to the city and CLA. In terms of GASB's coming up, we just implemented GASB 87, which was pretty extensive for all us auditors in our audit world. However, GASB didn't give us any break at all, because GASB 96 is probably just as robust. It's very similar to 87, but it's related to software. So Chitsame and Lunda's group is going to have to get together an inventory of all their subscriptions that might apply to this GASB. We're thinking right now in the state of Connecticut that this is going to affect the Board of Education's more than the city side, due to the fact that there's a lot of apps and software that the Board of Ed uses, Power School, attendance records, all that kind of stuff that might apply to 96. So that's going to be implemented next year, 6/30/2023. 91 and 94 are related to specific transactions, so we're not too concerned about those. Then we go into 2024. Can
I just ask about that 96? Is that similar to the lease? Is that similar to the lease standard?
It's very similar to 87 on the leases, and it's recorded basically the same way. It's just related to software versus other equipment purchases.
So it's not really going to affect the revenue and expense lines. It's just going to be an asset and liability kind of thing?
Yes, and it's only going to be on government-wide.
Okay.
And you're grossing up both sides at the same time, so there's really no net impact except for the total numbers.
Yeah, there might be a small P&L impact only if the asset value is different from the liabilities, but we haven't seen too much of a fluctuation between the two. And then I don't have a slide for this, but 2024 and 25, not too much activity. We are now into GASB 100. I think GASB 101 in 2025 on compensated absences might change what we currently do in terms of valuing unused time. So more to come on that one. There might be some work that will need to be done on that one. But right now we just want to focus on 96.
Thank you.
Does anybody have any questions?
So I just want to reiterate, we did go through a management letter and we did talk about a finding today. I don't want that to overshadow the fact that the city received unmodified opinions across the board. The city was a pleasure to work with. We look forward to working with them in the future.
I'd like to make a comment if I could.
Absolutely.
So it's my understanding that many municipalities were not able to complete their audits by the end of the year, and the city of Norwalk did. And I think that Norwalk Public Schools Administration and the City Finance Department are to be commended for doing that. It's a huge accomplishment.
Agreed.
It's all Lunda. He makes us get everything in on time. Oh,
Thank you all.
thank you. I just may heard communications from Troy. Unfortunately, he's on the road and he's not joining us, but he will look at the video and catch up.
Okay, I guess if there's no other questions or comments at this time, we can call the meeting adjourned, and we look forward to working on any follow-ups that are necessary out of the audit report.
Thank you all for making the time to join us.
Thank you, guys.
All right, thank you. Take care, everybody.
Bye now.